For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you very much, Brandy.
So back in July, you talked about the market's winning streak, and recently stocks have hit a new milestone. Could you share your thoughts on that?
Yes, clearly the last quarter of last year, phenomenal returns. The early part of this year have been great, to say the very least. We seem like we're setting records every week. Up until recently, things have calmed down. I brought along a chart that to show folks as far as what you're referencing, as far as quite a milestone. We've had 100% gain. In other words, we've doubled in a 354-day period of time, the fastest since WW2, since World War II. Normally, you get a market that doubles in 1,000 trading days. So you can see that this was about a third of the normal time. Now, COVID obviously contributed to that. We had this big drop and we rallied off of that bottom, but nevertheless, this is really, really good news.
David, what advice do you have for investors who are worried that maybe the best could be behind us?
Well, clearly last 12 months have been very impressive, but I want to remind folks of what we talk about on a fairly regular basis on the show, and that is returns are typically better when markets are hitting all-time highs. As crazy as that may sound, that's the way it typically works. Contrast that to hitting all-time lows and then again trying to get the bottom. So there's certainly things that can get in the way. I don't want to act like it's going to go straight up, because it probably isn't. But the Fed and Congress creating a lot of liquidity for the market and kind of staying out of the way as far as in the past. Inflation could be another big concern as far as going forward. And then the virus itself, that's been a real problem, to say the least.
So are there strategies that can be used to help address those concerns?
Yeah, so there's obviously trade-offs always. When individuals are looking at some of these concepts, there's good and there's bad to it. There's no sure thing, but historically some of these ideas have worked pretty well for individuals trying to protect capital. One is the diversification. I think that's pretty common. You know, bonds and real estate as well as stocks as far as in one's portfolio. Then trend following, and trend following is something that, again, not always works, but as a general thumb is kind of a way to look at what the market is doing and then adjust based on that. And finally, define risk. And define risk is certain instruments out there that can help be in place as far as when the market starts turning upside down. So 3 ideas that historically have done okay for individuals. There's no guarantees, but it's certainly something that people should be considering.
All right, David, thanks for joining us. We do appreciate it.